What's going on? If you are here for the first time on this channel and would like to learn more about savings, investments and wealth creation ideas, so this is the place. So let's start now without much ado on today's topic.
Non-payment of the premium before the due date results in lapse of policy. The cover ceases to exist when it lapses once. A policy can be revived if conditions are fulfilled. Often the insurers offer concessions and waivers on penalty to have you revive your lapsed policy. This is how it can be revived. A. Policy can be revived only till it has not crossed the grace period typically specified by insurer. It's also affected by the type of policy. Though, in order to get a revival quote, i.e. sum of all premiums due, and to pay it one needs to visit the insurer branch. A declaration of good health needs to be signed and submitted to the insurer depending upon the age and policy amount of the policy holder. 4. Principal amount, sum of unpaid premiums due plus interest must be paid on same date in due time. 5. A particular amount is quoted by the insurer in revival quote must be paid along with the principal amount and interest as penalty in order to revive your policy. Company may or may not give you waivers on penalty, it's entirely up to them. Companies can change terms or conditions once the policy is revived, and once revived, it shall remain unchanged until relapse. Let's also quickly look at types of revival scheme. Ordinary revival scheme. If the policy you possess has been issued by local branch, all you need to do is visit them, submit your principal amount plus interest plus penalty along with declaration of good health. Depending upon your age and type of policy, you are good to go again. Loan cum revival. A loan can be taken by the policyholder in his/her name and the loan amount can be adjusted with premiums. Even if paid up value of the policy isn't acquired, the policy can be revived. Until the revival date, the amount of loan calculated as of the policy is within a forced condition. This is most helpful when the policyholder finds himself/herself unable to pay the revival amount in lump sum. Special revival scheme. Finding oneself unable to pay the entire amount of due premiums, the already paid up value takes about 3 years to mature. This money can be used to pay up the old dues, penalties, interest etc. along with the difference between old premium and new premium. Rest of the procedures are same as ordinary revival scheme. The consent of policyholder is taken as the maturity date changes in this type of revival. Revival by installment. If the arrears aren't more than a year old and the policyholder finds himself/herself unable to pay the amount in lump sum, he/she can choose to pay the due in monthly installments over a period of 6 months or quarterly installments, i.e. 2 times in over 6 months. Losses by lapsed policy. The accidental death benefits cannot be availed. The already paid premiums may be forfeited. Surplus from shares, bonus cannot be obtained. No income tax rebate if the policy lapses within 2 years of conventional life insurance policy. The income tax becomes payable as the deduction gets added to the relevant year. So to conclude, the requirements for the revival of the life insurance policies mainly depend on the factors like the occupation and the health of the insured, age of the life assured, coverage amount, policy period already running edge. If the assured wants an automatic revival method, he can opt for it by paying the arrears with the interest of the premium. A proof of good health should be presented with an authorized medical report or the declaration of good health.
So thank you for watching the video. Do subscribe to the channel and press the bell icon to get notified on the latest videos. Bye for now and see you next time.